Berkshire Hathaway Vice Chairman Charlie Munger says he and Warren Buffett have succession plans in mind for when they step down from their leadership roles. He spoke with Yahoo Finance Editor-in-Chief Andy Serwer over the weekend at the company's annual shareholders meeting, telling Serwer about his confidence in the firm's next generation of leaders.
Well, I think you'll be surprised at how well both Warren and I are capable of stepping back when we feel our powers are too far deteriorated.
Have you talked about that?
Sure. And Warren has told people to speak up when the time comes.
Right.
If we've been rational all this way, do you think we're not going to try and be rational right to the bitter end?
Is the process, I mean, we're sort of in the middle of the process. You've been giving more and more control or authority to Ajit and Greg and Todd and Ted. So it's sort of a continuum, a process like that?
Of course. And by the way, it's working fine. It's amazing how good this next generation is. And they're steeped in our non-bureaucratic ways. There's these big bureaucracies, they think the work is done if you get it out of your inbox and into somebody else's inbox. That is not getting it done. Getting it done is when it's done, not when it's in somebody else's inbox. And if everybody's in a big committee meeting all the time, you're worn out at the end of the day and you haven't done anything.
Are Ted and Todd making all the stock choices at this point?
No, of course not.
Right.
Warren steps in and does big things.
Where do you think, Charlie, the biggest opportunities are globally right now?
Well, I don't think we have a master plan of knowing where the opportunities are. We're trying to find intelligent things to do with a torrent of surplus cash. And we've always had a torrent of surplus cash. And we're always looking for intelligent things to do with it. And if we find things that are intelligent to do, we do it. And if we don't find anything, we let the cash build up. What the hell is wrong with that?
Not much.
Yeah, not much is right.
So let's turn this over to the panel. And, you know, Oscar, a lot of people are paying attention to what Munger has to say. I mean, your thoughts on what he was saying there?
Well, I think he's right. I mean, look, first of all, if you think about any company, especially a company as diversified and large as Berkshire Hathaway, they're going to have a really, really deep bench. Mm-hmm. I suspect that their new investment themes, such as investing in Amazon and talking about having missed out on Google, have the fingerprints of the new guard all over it. I don't think that Warren Buffett woke up one morning and said, I got to buy Amazon.
But the two gentlemen who are in charge of investing in tech, one is not beating. He's not performing up to, I don't want to say up to par, but he's not outperforming. He's certainly coming in below.
Well, this is one way to potentially catch up. Go out and buy yourself some Amazon, maybe nibble at Apple. But I think we had just had a guest earlier on. He was at the Berkshire annual meeting. Greg Abel and Ajit Jain, what appears to be the two successors to Warren Buffett and Charlie Munger, perfectly great managers. But how much of a Warren Buffett premium is built into Berkshire stock? I think that is very much unclear. Rusty said when the succession plan is announced and when that change happens, you could see a pretty swift market sell-off.
Well, but let's keep in mind that they've been talking about secession for the better part of a decade at this point, right? Warren Buffett at virtually every annual meeting talks about the fact that they are ready for that. So I don't know.
Are shareholders really ready for it?
Well, we'll find out at some point or another. I just don't see him going anywhere really quickly. I also think it's really important that investors look at the totality of all of Warren Buffett's and Charlie Munger's statements, right? I mean, they're talking about buying back stock, but at the same time, and he talked this morning, there was a quote out from Warren Buffett that said that if interest rates stay this low, stocks are tremendously cheap. Well, if they're tremendously cheap, why aren't you out buying some of these stocks other than your own? Because there's an investment opportunity there. So there seems to be some change in thinking going on.
And amidst all this, he's pretty much, and I wrote a piece, and we'll talk about this later, he's redefined value investing, I think, with his purchase of Amazon.
Well, we don't want to steal your thunder, because we are a little deep tease there. At the same time, though, even if they've telegraphed the succession plan, I mean, I think, to your point and to Rusty's point, once they're not actually there helming the ship, you would have to think that there's going to be a drop.
I think it depends on what the short-term performance is, right? If they telegraph it, if they do it properly, and I have no doubt that they will, you say, look, they've been running the book of business, they've been doing 90% of the stock picks for the last year and a half, and we've had a great year and a half in terms of performance, then investors are immediately put at ease, because this is not going to be yes, this precise timing may be a surprise, but the fact that it's happening won't be a surprise.
Do you own Berkshire shares?
We do not.
Okay, just curious.